There was nothing in Texas or like the whole central US. So I
Right.
realized I have to start my own fund. Not what I intended ever to do, but it was needed.
Welcome to Alt Investing Made Easy, where we explore the complex world of alternative assets. I'm Roland, a securities attorney, investment advisor, and your co-host.
And I'm Sara, an investment advisor and corporate attorney, and your other co-host. We'll guide you through real estate, private equity, and more, making complex topics accessible.
Tune in for insights that empower your financial journey.
Let's make alt investing easy, one episode at a time. Welcome, everyone, to Alt Investing Made Easy. Thanks for joining us today. Today, we're delighted to have Dr. Sara Brand of True Wealth Ventures with us. She's a new friend and has a really interesting information and story to share with us about her venture capital funds. Sara, thank you so much for being with us today.
My pleasure.
Yeah, Sara, thanks for joining us. And to start out with, could you tell us a little bit about True Wealth Ventures and what that is?
Sure. So I'm a general partner at True Wealth Ventures, along with another woman here. We're all in Austin, Texas, among this group. And we invest, it's a venture capital fund. We invest exclusively in women-led companies whose core value proposition is improving either environmental or human health. We invest at the seed stage. So our check sizes are, about $1 million, up to $1 million per company for the first round. I can talk more about seed stage and all that. But we define women-led as at least one woman is full-time on that founding or C-suite team. So it doesn't have to be all women. Ends up that most of our companies do have a woman CEO. The vast majority do. And we are considered an impact fund because of the markets in which we invest in human and environmental health. I can talk more about our follow-on strategy and all that kind of stuff. We invest across the country. We usually lead the deals, take board seats. That's what
I'd like to get into all of that more, Sara. But first, let's talk, because we have had the chance to talk before. And in a sense, this is a second time we get to talk with you. But really, one thing I think is a really great part of the story of your company or your funds is actually your background and how you got into the finance industry and your STEM background and maybe that of your partner. Mm-hmm. So I'd love to hear more about what got you into, you are Dr. Sara Brand. And as we know, it takes a lot of work to do a Ph.D. in pretty much every field. So we'd love to hear more about, who you are and what led you to being a woman GP, focused on women-led businesses, and also a second part of it, which is managing a lot of women investors yourselves.
Right. Sure. So, it is a pretty unusual background, frankly. And as we'll get into more, it's pretty rare to be a woman in venture capital, investing as a GP. It's also, unfortunately, rare to receive venture capital financing as a woman entrepreneur. But I started here at UT Austin, actually, as a mechanical engineer, and became a little disturbed how they were teaching design engineers to see a problem statement and then select a metal to start machining to solve that problem. And I realized that is really avoiding a lot of the problem space and looking for more efficient ways to solve these, engineering problems. I realize that's not actually how engineers are, going to go out and solve these problems. But still, if that's how they're teaching people I thought this is an environmental catastrophe. So I sought out for my graduate studies, and I had worked too in the semiconductor industry at Semitech, and I had interned in the summers with Intel. And so I was kind of in the semiconductor industry already, and found this lab at UC Berkeley that was green design and manufacturing. So I went to Berkeley and joined this lab, and it was really looking at how in the very early design stages, you could avoid a lot of the environmental and human health impacts when it was much more efficient to change the designs while optimizing for cost and performance as well, of course. And so I spent time in mainly electronics, semiconductors, working in applied material, doing this. I sort of went as far up the value chain as I could, I guess, in that green, engineering sort of focus, and realized then that whether people adopted my tools and analysis had more to do with business decisions than technical ones. So I literally totally shifted gears and went to work at McKinsey and Company in strategic management consulting out in the San Francisco office where the head of the semiconductor practice sat. So I was at least in the same space, but doing just straight up strategy work. And then from there went into venture capital out in the Bay Area, just really realizing venture capital was the perfect, I thought, industry for me to not lose my technical background, to still meet with all these entrepreneurs, coming up with all these great technical ideas, but then being able to help them with more of that management consulting hat on of, all the different business challenges they were facing. So I found out that is what it was, and I loved it and really wanted to do it more long term. So coming kind of straight in from management consulting with a Ph.D. in engineering, I wanted to get more operational experience to be a better VC, and joined Advanced Micro Devices, AMD, out in Sunnyvale, but all their leadership actually sat in Austin. So that's what brought me back to Austin. And worked for AMD over 10 years, worked for 3 of the 4 CEOs directly, did lots of strategy work, ran several business units. And then later in my time, I was asked to lead the Executive Women's Forum or something. I can't remember exactly what it's called, but basically the global group for women at the company. And I actually declined it. I was like, no, thanks. I don't have time. And they said, you're literally the only woman vice president at the entire 15,000, person company that has any technical or operational background. Wow. The other 12 are in G&A functions. I couldn't believe there's only 12. I'm like, what? Yeah. And it was a very technical company. It's like 85% of the employees were technical. And so that was a huge eye opener for me. Not only that was true, but that I had no idea that it was true. And then I realized talking about unconscious bias. Like I'm blind to the fact that I was the only, woman VP with any technical or operational background. And it was because I was a mechanical engineer that worked in semiconductors, worked in, venture, literally realized I never met another woman in venture capital in my Bay Area days, going to the legal, firm sponsored breakfasts and whatever. Never met one. And also my husband started 512 Brewing Company shortly after we moved back to Austin. And that was all, bearded men that we employed. We got a woman now. But anyway, it was just, I was so used to being the only woman around the table that I just didn't notice. Yeah. So I started finally doing my homework and saw that when there were more, then it comes back to some early McKinsey studies actually, that show when there are more women in senior leadership positions at companies, and they mainly were looking at corporate, Fortune 500 kind of stuff, that they saw significant financial outperformance. And knowing I wanted to get back into venture capital, and I had actually earned way more operating experience than I ever intended to, but it was a great experience and I was enjoying it. And, but anyway, as I started looking, knowing I wanted to get back into venture, started looking at the numbers in the venture capital industry and saw that there was even a more extreme, lack of women in venture. And then this number of, realized I'd never even met one. And then, the percentage of VC dollars going to women-led companies at that time was 2%. The estimate of the women CEOs that got venture capital funding was 1% of companies. And unfortunately, that number hasn't changed actually since then, but we can talk about that. Anyway,
we'll get to that.
It was the best business opportunity I had ever seen because nobody was investing in these, women, and they performed much better financially. And when I looked around the country, they're very generously speaking 6 firms, VC firms that had some kind of gender diversity strategy, being very generous with that, but they were all on the coast. There was nothing in Texas or like the whole central US. So I realized I have to start my own fund. Not what I intended ever to do, but it was needed. So I partnered with Carrie Rupp, my partner here, the other general partner, True Wealth Ventures. I was introduced to her after telling several colleagues in the venture capital ecosystem that I was going to start my own fund focused on investing in women entrepreneurs. And they said, oh, you need to meet the other woman
The other one.
who recently moved back to Austin. And she had the perfect background coming from Dream It Ventures. She was the CEO of that as an accelerator. She had developed the first program specifically for women entrepreneurs, was the most prolific health tech investor at the time in terms of the number of health companies they were investing in, had just raised a $20 million fund herself, which ended up being the size of our first fund. So we were the only 2 women GPs in the entire state of Texas in venture for years too, after we started this.
Wow.
It's gotten a lot better, but it just to kind of, give a sense of just how nascent this still, was. And when we closed Fund 1, $20 million fund in January of 2018, it was literally the largest VC fund ever fundraised with an explicit gender diversity investment strategy.
Wow.
So a great accolade for Texas, and but really just indicative of how small the capital is focused on women.
Yeah.
Well, Sarah, I remember from our conversation last time that there are actually studies that show you said there's a distinction, with women-led firms, and that there are studies that show statistically that they will, just because of that factor, they'll have greater success. And I find it so fascinating. One of the things that we touched on is, because of the different ways that we perceive, men and women perceive things, that, there'll be things that men maybe will just be blind to. We're talking really broad terms. Some men for sure have sensitivities, but that was something that really fascinated me. This idea that being women led is statistically to your advantage economically.
Mm-hmm. And I think it's also more so in certain markets, maybe, because we look at the fact that women make 85% of all consumer purchase decisions and 80% of all healthcare decisions. And even like adult daughters and daughters-in-law are the largest form of healthcare in the United States for elder care.
Wow.
And so like silver tech, that's an area we made our first 2 investments in. That was certainly not like a focus area, but we just saw these markets where the traditional, male VC didn't inherently see the opportunity.
Right.
And because early stage investing is more of an art than a science, because there's just not a lot of numbers to go on, one of the ways you're trying to reduce your risk is be familiar with the market, and so if you don't see it as a big market opportunity, that's not something that's going to be, feel good to invest in when you're trying to reduce your risk. So we see a lot of opportunities like silver tech, for instance, or even women's health that have just been overlooked because of who's driving the decisions behind that, innovation capital.
And it's, I think, so important, Sarah. Roland and I were talking about this briefly. My dad has a background in medical research, and I always found it striking that some of the women's health issues are under-researched compared to the equivalent male research issue, let's say, from a medical perspective. And I think what you're saying is that, and this is so important too, to remember that any tech that comes forward into the market had money behind it. And if you don't get access to that money, it doesn't matter how great your idea is or how how life-changing it could be for lots of people in the world. So it's, I love the term silver tech, because it also means that if women are making these decisions and responsible for healthcare with elderly parents, for example, any tools that they can have to make their lives easier supports their successes in other areas, such as running businesses and whatever it is, that person is capable of doing if they're not needing to be the person who takes care of the people who genuinely need care. So it seems to me that what you're doing layers into our society in many ways. And it's important to highlight that. And it comes down to where money gets allocated and who's allocating.
Yeah. Yep. I think there might be even more low-hanging fruit in our areas just because they've been, thirsty for some capital and we can just apply some capital and they can do some basic upgrades.
Yeah.
Yeah,
exactly.
Oh. Yeah.
I think,
And also we find there's studies that show women entrepreneurs tend to start businesses that are really solving a personal issue that they have or their family or, friends have. And so there's an inherent advantage they have on product market fit, right out of the gate, because they're not just generally doing some financial arbitrage opportunity. They're really solving a big need, especially in the markets that we're investing in, which are, improving environmental or human health. So these are very passionate entrepreneurs that have identified a serious issue and are, solving that. They're very passionate. So not only is it better product market fit, but they're also very passionate. And so they're very perseverant and gritty. And for our Fund 1, which we started investing in 2016, we closed it in January 2018. But we invested in 12 companies. They've either exited, 2 have exited, and the other 10 are still operating.
Oh, wow.
And that's just, I think it's unprecedented for a, seed stage fund to still have a 0 loss ratio from that time frame.
That's amazing. And it's also a different model. I mean, we could get into talking more about private equity versus venture capital, how venture capital is maybe a subsection of private equity. But I do want to make the observation that private equity, for good reasons, gets some negative press. But there is another way. And part of it is because the model allows for 80 to 90% failure of investments that are made potentially. If you win big on one, then the other 9 can fail, kind of an idea.
Right.
But I do think that that's not super sustainable, right? That they're actually, and this you had talked about, maybe you could speak about it some more, which is if you pick your asset company carefully and then you extend the hand of partnership, you extend the hand of mentoring, your much broader experience than an entrepreneur would have just generally from your background and from not having to deal with all the daily things that a leader in an entrepreneurial situation has to deal with. It's, you can approach everything with why wouldn't you expect 100% success if you put the right attention to the details from the beginning to the end. Or 90% or 80%. Why do we accept 90% failure as something that's good as long as we're making money? That, to me, that's kind of a moral question maybe. But for the economy, putting aside morality, that seems like it's a good idea to help businesses succeed.
That's a good point.
And generally speaking, right?
Yes. Right. It feels like more of a gamble than, you'd want it to be as an investor in that fund, right?
Right, exactly.
And we tried to reduce our risk in several ways. One is we don't invest actually unless the science or tech is already proven. And so we can see, yes, this works. And it's not just like, oh, we're still researching it and it may not work. So that's, that's one of our strategies. We also look at how can this company get acquired versus IPO? Just because most startup exits happen via acquisition versus, an IPO. But that's what most venture capital firms are underwriting to. They want the company to IPO. It's not that we don't want the IPO, but it's just that we see if the vast majority of exits actually happen via acquisition after seed or Series A, so pretty early on, and the average valuation is under $100 million. So if that's the most likely successful outcome, we want to make sure when we invest that there's a pathway to that, which means that the company can't rely on having to raise a bunch of rounds and really, really big rounds. And of course, that can change as time goes on and the opportunity is more clear. But in case it isn't, which it isn't most of the time, that you've got a unicorn IPO on your hands, then we don't overcapitalize it. And we can be happy and return a great return to our investors with the, average outcome.
Right.
Yeah.
No, I think that's great. And, it's funny because here on Alt Investing Made Easy, we're focused on the private securities market, and we've touched on IPOs and what that means generally, how expensive they are, how big you really need to be to make that really viable, even though there are these many IPOs out there and whatnot. In the end, there's such a huge market in the private capital arena. And many big companies people don't always realize are still private. And so to me, it's very sensible to just have that as a goal, essentially. It's realistic.
Yes. And also the private markets are just getting bigger and bigger and bigger. And people are staying, or the companies are staying private for longer. And the average time to an IPO is getting close to 20 years.
Oh, wow.
Now. So yeah, I think I don't know, 16 or 18 or
That's
something
a really
like that.
long
But
time.
it's just gotten longer and longer. And so I think relying on an IPO for an exit is not, it's like back to your comment. I think it feels a little bit like a gamble.
Roland?
Well, Dr. Brand, yeah, I always kind of want to attach to specifics. And so I'd be interested in hearing what some of your success stories have been, the companies that you've invested in that have had successes and maybe ones that are still percolating, but that you're optimistic about. Any concrete examples would be really interesting to me.
All right, I've got two that come to mind. One is the first investment we made that's right here in Austin, Texas. So it's a good example for this group. It's called Unaliware. The CEO, Jean Ann Booth, started this smartwatch for seniors. She came out of retirement. She sold her first company to Texas Instruments, or second to Apple, and was retired. And then her mom, who was a model, actually needed a fall detection pendant with the button around the neck, which was all that was available at the time. The I fallen and I can't get up button that we've seen the commercials for. And she would not wear it because she's like, no, that's horrendous looking and stigmatizing, and no. And so back to my comment of like silver tech is just, there's low hanging fruit where you can take modern technology and apply it to markets that just have been, deserted of capital. And so she has an electrical engineering degree, semiconductor kind of background, and made a smartwatch that was all voice activated, does lots of functionality, ties to a call center, and has batteries in the watch band that can be clipped out and recharged, so you never take the watch off, because most falls actually happen overnight or when you're in the shower, when you have your pendant, charging or off because it's not waterproof. So anyway, just really thought about the design from the wearer's point of view. And anyway, so that has been a real need in the market that I think only, an engineer with her background and again, her mom's need was able to bring to market. And then a more recent example that we invested in is a company called Re-Fibred. I was at the Texas Alternative Investment Conference last year, and I pitched this company. They had a fun kind of pitch of audience and a judge panel choose the favorite company. The other two were actually like public companies, and Re-Fibred raised, I think it was like a $3.5 million round, and it won the audience choice and the judge's choice, just because it's redefining this opening up new markets and new revenue streams. It's two CMU women engineers that have figured out how to use hyperspectral camera images on used textiles, used clothing, and have trained it with AI to understand what the composition of the textiles are, so they can sort it appropriately for chemical recycling.
Oh, wow.
And yes, and that functionality to that level of 1 to 2% confidence is not available at all.
Yeah.
And so anyway, it's opening up huge new streams of used textiles that can be recycled. Anyway, lots of stuff. They're even
really
with
cool.
eBay. Is this a fake or not? So there's all kinds of interesting things they can do with it. With tariffs now, like, is this actually 100% polyester or not? Because it's tariffed differently. So anyway,
that's so interesting.
Very interesting applications. But
well, and also I think just broadly, contamination once you recycle something, meaning the wrong products mixed with the wrong products, is a huge reason why a lot of recycling doesn't succeed in the end, right? Yeah. So that's amazing.
Exactly. Like it either reduces their yield a lot or it like blows up. I mean, literally.
Yeah, exactly. Like it's very dangerous. Right?
Yeah.
Gosh, it seems like that technology might have other applications too. If it's that robust, then that sounds really promising.
Right. Yes, we're trying to get them to focus right now, of course, as any young startup should, but there's lots of potential.
Yeah,
Yes.
no, well, that's the strategy in you, right? The strategist, right? The management strategist. Well, it's so great to hear these examples, but one thing I do want to make sure we circle around back to is, you talked about raising money. You raised your first $20 million fund. Then you had a second one, which I think closed in 2023, which is a $35 million fund. So you basically got $55 million in these two funds. And I remember you mentioned to me that, as with any fund, you're raising money from investors. That's the whole point. So could you talk to us a little bit about who those investors are, or if unofficially you have sort of targeted investors?
Yes, our investor base is very unusual. It's 80% women, which when we closed Fund 1 and saw, oh, wow, it's 80% women, the Wall Street Journal at that point said that they thought that was unprecedented, which a lot of, funds don't share who their investor base is, but it probably was at the time.
Yeah.
And when we started raising our first fund, we did not think about whether, to target or ask or invite, women versus men to invest. We were just finding people we thought would resonate with the investment thesis. It ended up that when we had our first close and went back to look at the mix, it was 50% women, 50% men. But then those women started hosting us at their country club or their home and inviting their colleagues and their friends who they thought would resonate and have the capacity to invest to hear what we were doing. And so they were helping us fundraise. And we realized they were also very passionate about what we were doing, realizing they thought it would be a good return. But they also thought, if we don't invest, who is going to, and who's going to change this dynamic?
Right.
And so we're equally passionate about it. And then when we closed the fund, we saw, oh my gosh, it's 80% women. Did a poll just to understand the dynamics more, found that the vast majority had never invested in a VC fund previously.
Oh, wow.
The vast majority had never been invited to invest in a VC fund previously. And then Carrie and I realized, wait, we've never been asked to invest in a venture capital fund, and we're from the industry. And then also, we didn't ask our friends and colleagues. And Carrie went to Harvard Business School, and every guy that started a venture capital fund from Harvard Business School invited their colleagues or their classmates first.
Right.
And it wasn't natural as women to do that.
Right.
And it almost felt like culturally inappropriate.
Right.
And so we realized there's something here that women aren't being invited to invest in VC. And then we, as professionals, didn't invite our colleagues and friends, to invest. And so we started digging into that and realized that women in the United States are estimated to control like almost 40% of U.S. investable assets by the end of this decade for a number of reasons. High earning women are increasing 2x the rate of men. Then there's also the baby boomers who are transferring wealth. There's widows are the average widow age is, I don't know, it's like 55 or something in this country. Women, lived longer than men. So there's a bunch of dynamics where women are controlling more of the U.S. investable assets. And so we realize they're not investing in venture or in this innovation ecosystem. And if we don't get women investing in this ecosystem, it's going to be an actual issue for our innovation economy.
Right.
So now we've put a primer together that to talk about why is the venture capital industry not gender diverse, and why is that an issue and a huge opportunity? And then how does investing in venture capital work? What is the 2 and 20? What's a capital call? What questions do you need to ask? How are you going to make money? All this kind of stuff, just to educate more women about it. It takes a little less than an hour. It is not rocket science. It's just been this kind of cloaked, secret group. And so we're really trying to make it more
That's amazing.
accessible. And then so for our second fund, we also were able to invite a lot more women more consciously, and also got 80% of our LPs to be women again.
That's amazing. And I can see how that would be appealing because quietly, there's a lot of women who I think support everything that you're doing, some more quietly, others more loudly. Everybody has their own way of going about those things and managing their lives. But in the end, you speak with your money a lot of times, how you use it. So Well, listen, if there's any way we can be of support in that regard, I really love that, because here on this webcast, we're really about education for everybody. And everybody's included in that. And it's really important for education purposes to talk about these differences and acknowledge them, and promote people who are doing something to bring everything into balance, essentially. That's what you're talking about, So, Roland, anything to add?
Yeah, no, it's interesting that it's such a underserved market, but there are so many opportunities, and it's great having this dialogue here. And just, I would echo, like what you're saying, Sarah, is that we have created this podcast to try to serve as an educational platform for investors, and telling them about opportunities to invest in private securities. And you look at so many of our episodes; they've all been with men. We've had a couple women guests, but it's meaningful because it's not just a equity thing. Like, we want them, but it's really the opportunity. And I think that that's the thing that people should understand, that there are real objective reasons why a women-led venture firm like this, and women-led businesses and women-led investors can see things differently than men. And I'm really always trying to be as cognitive as possible about all the biases that I carry. We all carry biases, but that's part of wise investing, is being able to step back and think, well, what am I not thinking about here? What's the unknown? And for me, that what you said about the caregiver thing, that statistically such a huge, overwhelming majority will be, the elderly parent's daughter, more so than the son. So right there, that and silver tech, like what you're saying. So I'm really inspired, and I'm really glad that you're here in Austin, and we had a chance to make your acquaintance, and had a chance to have this conversation, for sure.
Well,
Sarah, if you have anybody that who might be interested to come continue the message here, just let us know. I don't know. We try and find a way to connect it to alternative investing, no matter what it is, even if it's like an operational company. And I do think, to speak to what Roland said, we are in the center of Texas. Texas has a dynamic that people recognize. But it doesn't mean that there isn't a lot of opportunity and people from all kinds of backgrounds doing a lot of interesting things. And to have the chance to highlight any of that, to just get it out there into the internet or the universe, or however you think of those things in social media, would be really an opportunity for us to kind of continue with our principles, which is that here, when it comes to wealth building and making money, everybody has a seat at the table.
That's a great message, Sarah.
So, well, let's not take more of your time, Sarah. Just to quickly say, I went to a Texas Women on Wall Street event yesterday with the girls at Ann Richards School. It was so fun. I don't know if you've ever been to that luncheon where you sit around with like some junior girls, or like 16, I guess, and talk about what you do. And they're like, what do you mean? So many of them, they're doing engineering stuff, but they don't know about the money side. And so I was like, well, it's all about the money in the end. You should pursue that. Because
that's right.
In the end, money is what, if you want to do cool research or cool engineering solution development, all of those things, somebody's paying for it. So anyway.
Agreed.
All right. Well,
we need women to stay in engineering too.
I know. Well, no, it was interesting. You'd be happy to hear that, like, of the 5 girls at my table, 4 of them were like full on 2 biotech, 2 other mechanical engineering focus. And then one girl was like, I'm going to be a social media star. Of course. And the funny thing is, I was like, she might end up the most successful because she had this really like bright personality. But anyway, it was funny. It was good for them to even be thinking about it. And I think that the schools for girls are focused on making sure young ladies become aware of the opportunities that are there for them, So,
yeah.
All right. So, Roland, you want to?
Yeah. What do you think? I mean, we're coming up on 35 minutes.
Okay.
We haven't really asked the what drives you personally question? I mean, do we want to get into that?
You want to,
do we have time?
We do like to see, do you have like a personal motto? Or a good example is one person we interviewed, he was like, my wife and I in our business seek work-life harmony instead of balance, because it doesn't balance always, but it's harmonious. So do you have anything like that you'd like to share? Or if you don't want to, it's okay too.
If I had a work motto, it's probably to really focus on the things that matter most and not, take your day up by the things that matter least, or just really be clear on what you're prioritizing. Because if I just do everything that comes into my email inbox, there's no way I'm going to be able to have the time to move the big boulders. So I end up having to say no a lot. And that was really painful for me at first. And then I read a bunch of, strategy and how do you say no? How do you get comfortable saying no? And the way I am comfortable saying no is I'm saying yes to my priority.
Yeah. That's really great.
Yeah, that's really good. Putting in positive
that's helped
terms.
me a lot. Which I think is needed more and more in this crazy world, with just a lot thrown at us. And
yeah, I agree.
Knowing how to say no is important.
No, but thank you for couching it that way, because you also don't want to think negatively, right? But it's so hard to sometimes just put the boundary about this is really what I can do. The pressure on being a super person or a super woman, and of course we do it. People do it to it's internal. It's not an external thing only. So.
Yes, I'd say I'm a type A personality as well. And so making sure I'm being appropriate for my role, especially on the boards, of not going in and trying to, get in other people's business, but wait until, they actually are seeking advice and seeking help. So
that's a lifelong journey, learning how to do that. Right. So, but thank you so much for spending time in your busy day with us. And genuinely, I look forward to getting to know you, hopefully through Texas Wall Street Women or in any other way. And we'll follow up soon. So let me go. I forgot I hadn't closed it out. So thanks everyone for joining us today on Alt Investing Made Easy. If you like this episode, please like and subscribe to our channel.
And remember, everyone, take aim with your alternative investing strategies.
See you next time.